Hi everyone, I'm Alvin, and today I'm going to share with you my opinion on this recent article that was on Business Times. Okay, so as per what you see just now, this is the article that I'm talking about. I actually received quite a number of calls and WhatsApp messages from my associates, from my colleagues, and also some of my clients and friends. So this was sent to me quite early in the morning by a friend of mine, and he actually called me. He said, "Hey bro, I ask you, is it that the Singapore property, the new launches, the price will drop by about half?" So I know I just wake up, so I was a bit shocked. Singapore property new launches going to drop by half, 50%. I said, how is that possible? He said, I sent you the link. You go and take a look. Then after that, he sent me this news. Okay, so when I read this news, I see the headline. Then I laughed to myself quite loudly because he just see the things he want to see, which is because my friend is hoping to invest in a real estate, buying in a new launch. He only see the things that he want to see, which is half price for developer of Singapore uh, to for new launches. So it become very whereby you never read the headline properly. Okay, and to be honest, there are a lot of people that misread or just read the title and didn't read the whole news, then assume things. So I've read through the whole thing quite a few times, and let me share with you my own personal opinion and the summary that I have after reading this. Okay, this real estate sentiment index, who is the one that actually take this survey? It's actually the senior executive of real estate firms, which is what we call the developer. So they are the one that take this survey. So this is based on the sentiments on the market and how they feel about the market. So like what you see over here, it says the RESI hit a record low in Q1 2020 amid this whole COVID-19 pandemic. Okay, and the index is at 3.2. Okay, so the next thing that I saw is that the last lowest recorded, the last lowest was actually recorded in Q4 2011 at an index of 3.3. Okay, and the next thing is from these surveys, from this survey, the sentiments for this real estate developer, they mentioned about three potential risks that cause them to have such a low sentiments. Firstly, is the slowdown in the global economy. Then the second thing is job losses and decline in domestic economy. And the third is the risk of tightening of financing and the liquidity in debt markets. Okay, but also based on this sentiment, it highlighted that the risk associated with the increased supply of new development land and real estate price bubble or excessive speculative activities disappear in Q1. It means that the developer sentiments is because of this pandemic, I don't think there will be a bull run. So in another perspective that we can see is that the developer will become more cautious on the price that they launch their new launches and what is the price point for their current launches. Are they overly bullish? In that way, it also means that the chance for them to raise price at this moment of time is lower, as they hope to sell out more units because of during this circuit breaker period. Okay, and lastly, investor hope to get distressed properties of up to 50% discount, but such opportunities haven't come on board, and so far price are stable. So I also realized during this period of time, I don't see super fire sale like I see in the 08, 09 period. 20%, 30% lower than market rate. Right now, you will see is mere percent. Recently, there's also a news. Pinnacle and Duxton HDB hit record high, not record low, record high, 1.2 million for a HDB, which is Pinnacle and Duxton. These are some extracts from this slide itself. Okay, so this is some of my personal summary. Okay, next we will look at some numbers based on these respondent sentiments from the survey. So it's from the report itself. Okay, firstly, sentiments on new launch prices. 50% of this developer thinks that the price will remain the same. 31% about say that it will be moderate lower. Then 18.75% says that it will be substantially lower. Over here, based on these two, what I personally understand is 50% of the developer think that the price won't drop. Okay, only 50% of them will think that will drop. And most probably these 50% that think that will drop are the developer that have the intention to drop the price. So meaning to say, it may not affect all the new launches in the car market. Maybe about 50% of them will have a drop in price. Or maybe they wanted to launch the price at this level, but they haven't launched yet. So they will readjust their price and they will launch it after the circuit breaker period at a revised price. So this is my understanding. And also you can see that their projected decline in price for new launches or new sales is only 2 to 5%. But for resale, they feel that the decline will be higher, 5 to 8%. There's a bit more volatility or a bit more risk for the resale segment. Okay, next, you can see over here, they are talking right now about sales volume. So 31% of respondents expect 8 to 10% decline in new sales volume, while 21% expect 20 to 30% decline in new sales volume. For me personally, I also believe that new sales volume will drop for a very simple reason, because of this circuit breaker period. Okay, right now, circuit breaker period, people is all at home. Agents are also at home. So for the more savvy ones, I would say we have adopted, or even I also have tried to do virtual viewings, show the new launch online. Okay, but not all agents have done that, and not all buyers are savvy enough to do that. Okay, the next thing also is because of this whole COVID-19 issue, foreign investors are not able to come to Singapore. They are not able to go and see show flat, get to know more about Singapore properties and all those. So I will say the transaction volume, the number of transactions for the whole year will most probably drop. Okay, next. Okay, sentiments on number of units to be launched. 56% says that the number of units to be launched should be the same. Okay. While 43.75% feels that there will be a moderate to substantial drop in the number of units to be launched. 25% indicated that developer will use e-platform for new launches due to COVID-19. In fact, there is this new launch called Copper at Newton. It's about 3 to 5 minutes walk to Newton MRT station. It was just launched for preview, okay, right before the circuit breaker. And they have to do everything in a shorter period of time because the government announced the circuit breaker period will start on April the 7th. So what happened was they, after that, do everything online. The sales are done online, virtual viewings, and even the purchase, the documents that you need to sign, the option to purchase, and all the documents is all done by e-signing. Then they'll meet the lawyers and to do all the rest of the paperwork. And actually, I believe this will be the new norm. In fact, a lot of developers have right now engaged a third party to help them do a virtual tour of their current show flats and post it online. So a lot of agents are using this. I'm also one of them that have conducted virtual tours of the show flat to the buyers. Okay, one of the reasons is because uh, buyers are still receptive to new launches for a very simple reason. I see from the comfort of my home or go down to the show flat, I'm not looking at my own unit. I'm not looking at the actual unit. New launch, as all of us know, it have been sold throughout these years based on floor plans, unless it's already a TOP project. So for most new launch, you're actually buying off floor plans, but why buyers are willing to do it? Because the number of documents you need to sign is thicker. There is more detailed explanation of everything, and usually the new launches come with a 1-year defect warranty period. Okay, and these are some of the factors that the buyers are more receptive, because actually it have been like that. Okay, so for resale, I believe there will be a bit more resistance, because let's put ourselves in a home buyer's shoe. If you are buying for own stay for resale, resale is what we usually call sold as it is. So we need to make sure that, is there any leaking, in the ceilings, or is there any things that we need to do, because, let's say aircon leaking, the whole piping leaking, I need to change. It's gonna cost me another sum of money, or there's water seepage from upstairs, or there's things I need to rectify, and it will all cost money. So for this very simple reason, resale will face a bit more what I call resistance compared to new launches, because new launches buyers are protected. They know that, hey, it is we have a 1 year defects warranty period. The developer have to make good of whatever defects during this period of time. Okay, so the next thing that I see is 22% reported developer will either extend project completion or postpone new project launches. Okay, so why only 22%? So based on my own opinion, is a lot of these launches, developer usually on the option to purchase, they will write TOP by maybe, for example, July 2022. And throughout these past few years, I've seen that most developers, in fact, they will complete the project way ahead of this expected TOP date in their option. They can be as early as half a year to even 1.5 years. And that is also one reason why I believe that lesser number of developer will extend project completion, unless those that is very tight timeline already, or smaller project, or those that have main con having issues. Then the other thing is it also include postpone new project launches. So what it means is that the developer already bought the land, but they haven't launched it. So they may want to launch it at a later part of the year, to a later date, to reduce the impact. Because to all developers, my first launch is very important. This is where most of the media will come. My project will be in the social media. So I want to have as positive a news as possible. Okay, next thing is 36% hope government will extend ABSD, and 18% felt ABSD timeline should be temporarily suspended. Actually, these two is already answered just 2 days ago. They talk about the government actually have this temporary relief, and some of these developers, they will have additional 6 months extension for their ABSD deadline. Okay, for this I will share in another video most probably, or you can leave your questions or comments in the at the comment section below, and I will answer to you all separately, and share with you the article on it. Okay, so in summary, right, this is my personal opinion on this article itself. Okay, what you see here is the private residential price index. Okay, they mentioned in the news that the last lowest was recorded in Q4 2011. So I went to see what have these sentiments have in relation to the property market or the price index. And Q4 2011 is here, the one that I marked red. I realized that it seems that although the sentiments are low, we can still see there's a very significant growth after that period. And there wasn't any significant decrease on the price index, even though the sentiment is low. From this, I feel that the sentiments does not have a direct correlation with the property price index or how the price may move, but it's more on the developers' sentiments based on their own interests, and based on the company point of view. And you can see one of the reason why the sentiment is low maybe is because, this period is where after the global financial crisis in 08, 09, markets start to become very bullish. Then that is when government come out with 1, 2, 3 cooling measure. Then you see that the price suddenly like taper down, is no longer so bullish. So as a developer, it's like, oh, my sales volume is affected. Foreigners have to pay more. I cannot sell at a higher price. So this is their sentiments. But actually, the take-up rate and the price still maintains on. So in this sense, I will say that these sentiments is just a report based on how the developer feel on themselves, and it's not the common grounds or the consumer's point of view, but more on the developer point of view. Okay, next thing is, this one I think is a bit more important or more related to us consumers. Okay, you see, survey based on sentiments of senior executive, they say that the top three potential risk factors based on survey is number one, slowdown in global economy, number two, job losses, and number three, the risk of tightening of financing or liquidity in debt market. Below are my comments and my opinions on this thing. Okay, number one, the slowdown in global economy will potentially lower the number of buyers who can afford to buy real estate. Okay, number two, job losses and decline in domestic economy will potentially lower the number of buyers who can afford to buy real estate. So you can see these 2 points is talking about the number of buyers who can afford to buy real estate may lower down. And number three, the risk of tightening of financing or liquidity in debt markets will potentially potentially lower the number of buyers who can take a loan to buy real estate. And also another thing that I feel is smaller developer may have a higher risk of being over leveraged. Developer that don't have such a deep pocket, they may face this risk of over leverage. So we can see my summary on this is that it is about buyers buying real estate. The number of buyers buying real estate is lowered because of this. So for the developer's point of view, it's definitely not a good sign or not a good indicator to them, because the more buyers that can afford to buy, higher chance and higher possibility for them to sell their units. So I come out with these 4 questions for you and I as buyers, not as a developer, as consumers. Okay, number one, are you affected by the economy slowdown and will you face retrenchment? Number two, will you have a problem forking out 200K to 250K within the next 2 months to purchase a property? Okay, this is based on about $1 million property. Number three, will you have a problem paying your mortgage loan without a job in the next 6 to 12 months? Okay, this one is based on, for example, if you have buy a property, we will know what is your monthly installment. So if suddenly you get retrenched, are you still able to tahan for the next 1 year or so without a job? Okay, so this is what I'm trying to say. And number four, do you think you are over leveraged or have various outstanding credit card or personal loans? So these are 4 questions that I believe all of us should ask ourselves if we are going to buy a property right now. So if your answer is yes to all, my recommendation is don't buy, don't make a property purchase, because you are at a very high level of risk. Why am I sharing with you all this? Because as a property agent myself, I always believe that I need to give good advice to my buyers. We should all be financially sound before we make this type of property purchase. Buying a property is supposed to be a happy thing. It's not supposed to be a stressful thing. That is my own personal opinion. And I always hope that my buyers are all happy. So I always make sure that they are financially sound. They are prudent. We'll do our financial calculations together. I will explain to them every step of the way, by when they will need to pay what thing. We will work out what is the best way to buy a property, how much you can afford. So these are things that we need to know before we really commit ourselves into a purchase. Okay, next thing is these two, as I highlighted just now. So I'll go one by one. The first one over here is the sentiments of risk associated with the increased supply of new development land and the real estate price bubble or excessive speculative activities disappeared in Q1. So in short, over here, this was what I quoted from the news itself. And below this is my summary. So with the current pandemic, the potential of a real estate bubble or excessive speculative activities is pretty much non-existent. Okay, this is the developers' sentiments. With the current pandemic, the potential of a real estate price bubble or excessive speculative activities to me is pretty much non-existent. This is based on my opinion and my understanding on what this article is talking about. Speculative activities and these are price bubble are events that will increase a buyer's buying risk. The risk after they buy already, they worry that they buy at high. And financial crisis came and, price dropped by 20-30%. These are very worrying factors. So actually, with these sentiments, I strongly believe developers definitely don't find that it's a bullish market anymore. And it will be a very good opportunity for ready buyers, people, especially people that's buying for own stay, to find a best buy or to find a good buy. Why do I say that? Because developer also know that market is no longer bullish. They will not outprice so fast. So the price that you're looking at now may be one of the lowest price that can be. Or when this is the time where developer that make more profit margin, they will drop their price of their current launches, by giving discount. Then this is definitely a good time for these ready buyers to buy into this type of properties. So over here, what I feel is that if you are ready, this is maybe one of the safer time for you to buy at a good price. And the next thing I thought about is the last part of the whole report. Investors hope to get distressed property of up to 50%, but such opportunities haven't come on board, and so far prices are stable. So why is that so? Okay, for me, I find that the reason for not seeing such a significant decline in prices, especially for new launches, is because of these three reasons. Number one, developers are having a higher land cost and higher construction costs, as compared to 2005 to 2010 period of time. That point of time, the land costs are much lower, and also due to inflation, construction costs have over the years increased. So the potential profit margin is being lowered. So they can't drop the price much further because no developer will wish to sell at a loss. In fact, no developer will want to sell at a loss because it don't bring them any good. And it's a business. There's always a cost. Then we will have the selling price, and there must definitely be a profit. Then the next thing is government cooling measures such as the total debt servicing ratio, loan to value, additional buyer's stamp duty. To me, all these are safety net for buyers and to prevent them from being overly leveraged, like what happened during the previous global financial crisis in 2008. At the point of time, new launches have another two payment scheme. Right now, we only have one core normal payment scheme generally. So previously, there was two. One is interest absorption scheme. The other one is deferred payment scheme. So both means that for deferred payment scheme, buyers only need to pay a small amount, maybe 5 to 20%. Then the rest of the amount, you only pay after TOP. When the project TOP, then you pay. Then interest absorption scheme is you do not need to pay the interest. You only need to pay the principal amount. So you are not paying your full loan throughout. Or even when you are being staggered payment, you are actually paying way lower than what you're supposed to pay. So all these buyers become overly leveraged because you do not need to have a lot of cash. You do not need to do your financial homework well. In fact, a lot of speculators at the point of time, because they feel that market very bullish. Right now, I buy, I only need to spend 20%. Then before the TOP, I quickly sell. I make a quick buck out of it. My return of equity will be way higher. Then when property crash because of the financial crisis, a lot of speculators gonna burn. Then what they do? Declare bankrupt. So after that whole saga, the government come out with all this to prevent, especially for Singaporeans, to be overly speculative or overly leveraged, and to protect all the Singaporeans, and is to protect us from falling into this type of situation. And that is why the property owners nowadays they are actually more well-to-do in that sense because they are more financially sound. So you don't see this type of distress sales as much. And for me, the chances of a higher decline in price may come in the resale segment or potentially for luxury and investment properties. Okay, why do I say that? For the luxury and the big quantum properties, there's a higher potential because this type of owners usually also invest in the financial markets, the stocks, forex, blue chips, all those type of things. And we know this period of time, market drop a lot. Those that play with margins, they will have a lot of margin calls. So they may be cash tight at the point of time, and their properties may be worth 2 to 5 million, in the aspect. So they will wish to sell this to liquidate and get this money out. So they don't mind losing a bit more at this moment of time. So you'll see the price drop. In fact, maybe they could have bought 10, 20 years ago at $1,000 PSF. Then right now, maybe market is about 1,800 PSF. They sell at 1,005. You feel like, wow, $300 per square feet drop, but they are still making a profit still. It's just that they want to liquidate some of their asset to transfer this money, maybe to go back to their stocks or to cover their margins, things like that. And for resale, it's also because of the same concept. They may have buy at 10, 20 years ago. Right now, the market have go up so much. Even if they sell lower, it's still above their base price. So there's a higher chance for price decline based on all these factors. Okay. So these are some of my opinions on this article, and I hope that you all enjoy it. And if you have any question, you can leave it at the comment section. If you like my video, please click on like, or you can subscribe to my channel over here. And I hope to see you soon in my next video.